Yo, what's up, guys? Today we're going to be doing a trade recap. Today is the 13th of May. Alright, so let's just replay our data back to the 13th. Okay. This was 12. This was 12. Let's go to today, this morning. Let's stop it at 6. Yeah, let's do 6. Okay. So 6 a.m. today. What do we have? ES is on the left and Q is on the right. Alright. If we look on the daily, we're obviously super bullish, right? We're at all-time highs, so what do you expect? All of our draws are obviously just going to be bullish as fuck. The first thing we have to take the note of is the highest time frame fair value gap, which is on the 1 hour right here. We can see on the 1 hour, it's kind of respecting the CE of this fair value gap above the halfway point. So we can assume that, you know, the draws on liquidity are still higher, which is all-time high right here, and also prior day high. Also, thing to take note too is you can see right here we kind of barely touched the high right here, meaning, you know, this is also considered equal high. Since we have stacked high like this, it's kind of a very strong draw on liquidity. I think this might be London highs right here, but yeah, you get the point. So we're obviously looking for longs today. We drop down to the 4 hour. What do we see? Inside this fair value gap right here, respecting it. We also have another bullish fair value gap, which is still currently being respected. Halfway point is still up. We can label this as 4 hour fair value gap, right? What else do we have? Another right here. We have another 4 hour fair value gap right here, which got tapped into, I can see. I'm just gonna delete this 1 hour one just because it looks better. All right, drop down to the 1 hour. Obviously, you can still see we're very, very bullish still. This uptrend, keep it simple, you know, just boom, boom, boom. We're still moving up. We're bullish. Like I said earlier, this London high was technically our equal high. So I can label this as London high. All right, another level to take note of too is this London low. London low. Just an area where your price could potentially trade back into. Then I'm gonna turn this off just to make it look cleaner. All right. Another thing that my eye sees is this low right here. This is a low that's inside an hourly fair value gap. So what do we call that? That is a 1 hour intermediate low. Basically, it's just a low that gets tapped into an hourly fair value gap right here and then moves away from it. Even if it touches a little bit and moves away, it still technically counts, so I would draw it out just as a key level to reference. And then as you can see right here, this candle does tap into it. I'm gonna move higher, but right now we have no entry yet. We're still waiting. All right, what else do we see? On the lower time frames, it looks like it's in a downtrend, right? 4 hour candle is still in a downtrend, correct? We are in this 15-minute bearish fair value gap. Right, I'm gonna get rid of the 4 hour just because we kind of see, you know, higher time frames were bullish. Once we drop down to the 15, okay, we're kind of semi intraday bearish, but what do you see right here? We see this fair value gap kind of getting like disrespected because it's kind of getting traded above the halfway point. You know, if it truly was bearish, I would want this to stay under. But yeah, overall my bias right now is still gonna be bullish. I'm gonna be looking for long opportunities, so I want this to kind of just act as a rejection, trade lower to sweep out any liquidity down here. Maybe like this 15-minute fair value gap. Do we have anything lower? No. We do have this 4 hour. This is a 1 hour intermediate low as well as a 4 hour fair value gap. See right there. Sometimes the same levels could act as two different things, because on this one it was a 1 hour intermediate low, but it is also the same level as a 4 hour fair value gap, which is a pretty good level to be referencing. All right, and then I'm gonna go on the 5 minute. The 5 minute, the reason why I like the 5 minute is because it's basically the lowest time frame in which I'm looking for a key level to tap into, right? So if I'm looking for a key level to tap into, let's say this 5 minute fair value gap right here, I'm gonna be looking for the highest time frame reversal. And if I'm already on the 5 minute, then I'm gonna be looking for a 5 minute inverse fair value gap, which which is best to be taking the highest time frame. But obviously, if it doesn't present on the 5 minute, I can drop down to the 1 minute as the lowest time frame. So that's why the 5 minute is always a good reference right there. And then like I said earlier, this is a 15 minute fair value gap, which I want to be respected. But then we also have this 5 minute right here. 5 minute fair value gap, which price is currently trading into. This is still at 610, by the way, so market hasn't opened yet. Oh wait, no, not this. Sorry, this. There we go. Yeah, honestly, I don't want to be looking for any longs, even if this inverses, just because my draw on the, I needed to sweep lower, because this is not really a significant low to be swept before moving higher, in my opinion. Oh wait, what the fuck? Yeah, I still want to see a sweep lower. I don't want to just automatically assume that this is a key level, even though it is. Market hasn't opened yet, and I would honestly want to wait for more volume to come in before I just assume that this is the lowest point. I'm just gonna mark it out because I don't want to 1 hour intermediate low / 4 hour fair value gap. Okay. What I'm hoping at market open is that for the price to drop down into this 5 minute fair value gap and give us like a lower time frame inversion. So let's drop down to the 1 minute. Okay. Here ES is on the right as well, or on the left. Okay. I want to see price trades back down into this and hopefully sweep up higher. Let's see. Market opens, boom, we trade back down into it. All right. Do we have any open fair value gaps on the 5 minute? Nope. 4 minute? Nope. 3, 2, nope. 1. So it's still forming right now. Let's see what it does. Boom. Okay. Seeing that it kind of drops lower now, my bias for this 5 minute fair value gap getting kind of respected kind of goes away, because right now you kind of see it just inverses it. So what we potentially could be doing is looking for a sweep of these lows. But this is also not a significant low for me to be targeting for a reversal, just because it's not really a key level. It's just a lower time frame sweep. A key level that I could be looking for is this 15 minute fair value gap down here, or maybe these London lows, which is still pretty low. But let's see right now. Let's see that on the 1 minute. Yeah, right here we see we get a sweep on the 1 minute, and also a sweep right here. So if you were to take this as a key level to make a manipulation leg, this was technically the fair value gap that you would be looking for, or looking at. Remove this. This is technically your manipulation leg right here, this high to this low, and then you would take this inverse to the upside. But obviously, I know from hindsight now, but looking back, this is not a significant level to be referencing, I don't think, because even though it is a swing, yes, we still have lots of higher time frame liquidity on the bottom, which is like the 15-minute fair value gap right here. You know, this is not a good reference to be basing it off of, because yeah, you want to look for the highest time frame one just because it has the most power. But if you were to take this entry, look, this is what happened. Sweeps lower. Okay, we see a reversal. We do get this 1 minute inverse, right? Wait, no, I don't want to do that. Okay. Let's just play devil's advocate, and let's just say that, you know, this is a high time frame key level and it could be reversing, you know? ES does have ES also just swept Asia lows as well. So this could just be an SMT, but this SMT is kind of huge, so that should already be a red flag. Let's just say you took this, right? Where would your targets be? Your target, based on the model, would be at the closest unfilled 5-minute fair value gap, which would be right here. I'm gonna do unmitigated 5M FEG. All right. Do we have a 15-minute? No, kind of. We just have this 15-minute high. This would be where your technically target is, but in this case, since you're entering off so early, this would technically be your break even, right? And where would you target? Obviously, the easiest target would be the swing high, you know? So let's just say you did enter right here. Where would your stop loss be? At this swing low, targeting this. But, you know, this risk reward is so ass. Like, I don't know where you would even find the next one. I mean, I guess the next one based on unfilled would be right here, which would be a 15-minute unfilled. 15-minute fair value gap. All right. If you want, you could be targeting these, since we are at all-time highs. So we could just get a flush up for all we know, right? Yeah, let's see how this plays out. Boom, you would go break even there, but unfortunately, your entry, right when you entered, you would have basically went break even right at your entry, which is already a sus, like you should be watching out for that in the future, in case this setup does present itself. You know, you don't know that in hindsight or beforehand, like, because for all you know, you would want this to sweep up higher and then for you to be able to move your stops, you know what I mean? But in this case, it kind of just took your break even. You didn't even have a chance to like move it to break even, I don't think, just because like when it's happening in real time, this moves so fast that you either won't even get filled or like you would have totally missed it to begin with. So yeah, let's see how this plays out. Yeah, you would have just got stopped out there. Yeah. So when that happened, what I did find though was this 4-minute. Usually, after a trade like that, I'll just get rid of everything, go back onto the higher time frames and see what other reference levels I could be finding. In this case, we do see a 5-minute intermediate low. What's an intermediate low? An intermediate low is basically just a low that's inside a fair value gap, right? A low inside a fair value gap. And what do we also have? London lows. Just because, you know, the original trade didn't work out, my bias is honestly still bullish, just because we're not delivering from anything, you know? Like, this move right here is technically just a pullback, a deep one, but it's technically just a pullback. Like, there's this, it didn't deliver off a significant high, you know? Like, this would be a significant high for it to be delivering off of, but it didn't take anything, you know? And on the higher time frame, it's still the same thing. Like, these highs are still untouched. We still have like lots of low resistance liquidity, especially at the highs. And technically right here, we're still respecting bullish order flow, you know? What else do we have? You know, this 15-minute, yeah, this 5-minute intermediate low is right here. And what do we see on ES? Let me see. ES already took out Asia lows. Okay, well, let's see. I don't want to just be catching a falling knife and just shorting right here, you know, because where's the there's no confluences. What key level did it tap into, you know? Okay, it tapped that. Okay, now we see a strong reversal. Do we have a 5-minute fair value gap? No. Do we have a 4-minute? Yes. 3-minute? Kinda, but it didn't close through. 2-minute? Yes, but obviously if we have a 4-minute, it should be the highest one. Let me see. And the reason why I think that we didn't need a trade to this London low was just because ES already took out London lows, you know, right here. ES took out these London lows. So technically, when we have an SMT with ES, these lows technically count as already taken. So technically, there was no other low besides this 5-minute intermediate low and this London low that I was looking for, right, of this range as a key level. So I can assume that this was the lowest point and this could be the low of day. And knowing that, after it taps into the key level, where is my manipulation leg? Okay, the manipulation leg is the high to the low, from up here to this, to where it taps the key level, is the manipulation leg. And the highest time frame manipulation leg is gonna, or the fair value gap is this 4-minute, right? It's 4-minute IFVG. Okay. So we do get a 4-minute. The 5-minute, there's nothing, so you wouldn't take it on that. 4-minute, there's a 4-minute right here. So you would go long, stop loss right here. Where can you target? Unfilled 15-minute, you know? We also, the thing about trading all-time highs too is that, like, we're just so bearish, or bullish, I mean, that you could literally just target all-time highs. But based on the model, based on the strategy, the targets should be unfilled fair value gaps on the 5 or on the 15, right? So do we have any on the 5? No. 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 We do have one on the 15-minute right here, which is a 15-minute unfilled, right? It's going back on the 4. Let's see. And also a break-even point should be at the swing high, you know? So this is what I'm looking at for break even. I want it to close through or just tap into it, and I'm gonna be moving my stops to break even. I think on today, I think I entered a little bit later just because I missed this 4-minute, but I still entered around the same time, so it should be fine. I think executions are gone anyways, so. Okay, yeah, so I entered on this closure. I waited for this candle to close. I entered right here. Targeting 15-minute unfilled on the 4-minute. Stop loss right there. Boom, 4-hour candle, or a new 7 a.m. candle, I think. Yeah, 7 a.m. candle opens up. There you go. You kind of see now that, like, since this low, we did put in like kind of like slanted liquidity, which is kind of suspicious, but honestly we had an SMT with ES already, and my drawn liquidity and my bias is just so bullish that I'm already in this trade anyways. Like, I'm willing to take that risk and trust that this SMT was the lowest low, you know? So let me see, where's my break even? All right, right there. Boom, we tap into this, break even right there. So now the trade should be like this, you know? The trade should be like this, if not a little bit higher if you want to secure more profits. But another high that is right here is this 5-minute high, I think. Yeah, it was a 5-minute intermediate high. Could be your first TP, but I think I just held full. Yeah, right there, TP right there. Targeting that. It's almost there. Okay, now looking back right here, if I was on the 4 minute, yeah, it still respects this. This is a 5 minute fair value gap that also gets respected right here. See? Confirmed for you to still be in the trade. And boom, it taps it. Right? Honestly, I will say though, the conditions at the entry are not A+. I would consider this like a B+, A- kind of thing. Just because, again, we had the SMT, which is normally I don't like. I just like it to be a key level. But regardless, we still have to enter just because, you know, the strategy says so. Another thing is too, like, since we just have all these slanted liquidity, like we marked out up here, in a normal case, I would just take your piece of the pie and go. But if you had runners, you could honestly just hold to all-time high, just because like these are low resistance and can just get ran through very easily. But I think, in my opinion, it's better to just take your piece of the pie. And honestly, this was a really good trade. You know, 165 points is, or 160-ish points is crazy already. But yeah, if you had a runner, you can honestly keep it the runner. And yeah, it eventually does hit. Yeah, that's it. That's the trade recap for today. Oh, and also another thing too is this 4-hour candle. I would honestly recommend to be trading with it, you know? So if the 4-hour candle is bullish, take longs. If the 4 hours candle is bearish, depending on the context, of course, you need to be short. You don't want to be fading the trend as well, you know? Just because we're trending downwards, like, initially, doesn't mean that we're automatically bearish, you know? You have to consider the higher time frame trend. The higher time frame trend is telling you that it's bullish, you know? So this technically small down move is just a retracement to grab more liquidity, you know? And if you want to be on the right side of liquidity, you have to not marry your bias, but understand that it's not going to go your way immediately. And it's important to just always understand the higher time frames rather than looking at the lower ones. Alright guys, I'll see you tomorrow for the next one.